Hi crypto fans, welcome to CCS Cryptocurrency State. My name is Santiago, I'm a web developer and investor, and in today's video I'm going to give you a trading strategy using only two indicators. This strategy is 90% effective, so 90% of the times that you use it, it will work correctly, and I will explain you in the chart how it works and when you can use it. And if I tell you this, it's because I use the strategy and works for me too. Before we begin, please like the video, subscribe to the channel and click the bell to get the notifications. I have seen that most of you continue seeing my videos but are not subscribed, so please subscribe to the channel to help me grow it. Join me in Twitter, CryptoCState, and leave me some comments on the video after you see it. Without anything else, let's go into it. Hey guys, before we begin and go into the chart and show you the strategy in the chart and indicators, we need to define in what type of investment we are going to use the strategy. In a previous video on how to turn $1,000 into $5,000, I did this video a couple of days ago. We defined there the type of investor that you are. You need to understand this and be emphatic with one of these type of investor because you will use different strategies according to what you are doing. We say in that video that a plain investor is someone that holds the position for 10 years or more. A hodler, I divided this category in four, the investor category. The second one, the hodler. Ideally, a holder should hold his crypto over a market cycle. In cryptocurrency, right now is around 4 years, where we have a bear market and a bull market. We usually should buy at the bottom of the cycle and sell at the top of the cycle. Then we have the swing trader that works and makes trades over a cycle and takes advantage of the swing prices on it. Each trade may take days or weeks, and he trades in a bull market and in the bear market also. And then we have the daily trade that enter a position at the beginning of the day and is out of the position over a 24-hour period. So when you understand the type of investors, then we need to understand this strategy. In my case, I have 4 types of investments. One, I have my investment portfolio. These are coins. In my case, it's only Bitcoin that I will not touch at least for 10 years from now. So I don't take anything from that. I have that in a hardware wallet, and you should do that too. And I don't take any of that Bitcoin, even if we see a moon price or we have some retracements. I don't touch that Bitcoin. My second investment is a holding portfolio. So I bought in March of 2020 because it was screaming that we needed to buy crypto at that moment. And I have been holding for there in all this bull market, and I will sell trying to catch the peak of this bull market. I also did a video on what charts you need to see to catch the peak, so please watch that video, it's very useful. My third investment is a trading portfolio spot where I buy crypto and I sell it in spot positions. And my fourth investment is a trading portfolio investment using futures and leverage contracts, which is the most risky of these investments. These are also ordered by the risky investment. So what I do is when I get earnings from my trading portfolio in futures, I put that money into my third investment, which is the trading portfolio spot. And when I do a certain amount of money there, I move that into my holding portfolio. And eventually, when I sell on this cycle, I will reinvest in my long-term portfolio when we get the bottom. So once we understand this, then my strategy, the one I will explain now, it will only serve you for a holding portfolio or a trading portfolio spot. It will not work for you if you are trading with leverage, and it will not work for you if you are investing in a long-term position. The two indicators that we are going to use are the RSI and the MACD. Maybe you already are familiar with these indicators, but trust me when I say that I will give you some picks and I will say some things about these indicators and show you in the chart that you don't know about them, and maybe even you are using it incorrectly. So let's go with the first one. The RSI is the Relative Strength Index, was developed by Wells Wilder. It's a momentum oscillator that measures the speed and change of price movements. The RSI oscillates between 0 and 100. According to Wilder, the RSI is considered overbought when it's about 70 and oversold when it's about 30. These settings we are going to see in the chart that you can modify according to what you want. And this RSI calculation is based on 14 periods, which is the default suggested by the creator. But this can be lowered to increase sensitivity or rise to decrease sensitivity. So a 10 period RSI is more likely to reach overbought and oversold levels than a 20 period RSI. And because all the oscillators and all indicators are based on mathematical formulas, this is the formula for the RSI. You can get into depth in this, but I will not do that right now in the video. The second indicator that we are going to use is the MACD, which means Moving Average Convergence Divergence. The MACD can be used to identify aspects of a security overall trend. Most notably, these aspects are momentum as well as trend direction and duration. So for the RSI, we mostly have a momentum oscillator. Here we have momentum, but also direction and duration of the trend. What makes MACD so informative is that it's actually the combination of two different types of indicators. The first one, the MACD employs two moving averages of varying lengths, which are lagging indicators, to identify trend direction and duration. Then the MACD takes the difference in values between those two moving averages, which is the MACD line, and the exponential moving average of those moving averages, which is the signal line, and plots that difference between the two lines as a histogram which oscillates above and below a center zero line. The histogram is used as a good indicator of a security's momentum. The most common setting for the MACD is put the 12 and 26 moving average and the MACD line in 9. Here we have the formula also. Hey guys, this is my cat Bitcoin, and we want to ask you, please, before we continue with the video, subscribe to the channel and click the bell to get the notifications. So guys, we are here in the chart and I will show you how this strategy works. So if this is your first time I am using TradingView, you need to go to Indicators and search here the Relative Strength Index, which I have already in my favorites, and the MACD. And once you select those indicators will appear here. We have the default setting for both, and are the settings that we mentioned before, 12 and 26 with the MACD line in 9, and then we have the RSI in a 14 period. If you want, you can change the settings here in both indicators. And in the chart I am having here the VLX, which is the historic price of Bitcoin, where you can see prices that the exchanges usually don't show, and we have here from 2012 until now. First of all, before using the indicator, I recommend you to draw some lines of resistance and support in the chart, and then you will see here the RSI and the MACD. I marked here already some points that will coincide with the strategy that I mentioned in this video, and the points are: when it's in green you should buy, and when it's in red you should sell. So I will start from the last price now. We have the last peak here at $88,000 for Bitcoin. At that moment we have here the RSI in 78, a little more actually, 79, almost 80. And if we see here in the MACD, we have the red line crossing the blue line. So when that happens, that means it's an indication of sell. And when the blue line is crossing above the red line, it's a time to buy, according with the crosses on the MACD. And here we have the histogram, which mainly will show us the momentum of the trend. So in this case, like the default values for this is a 14 period, and we said before that if the RSI is above 70, we are in overbought conditions. So what we need to show here is that when the RSI is above 70 and we have a cross on the MACD, and this only applies when we see the chart in a daily basis, so the candles need to represent each candle a day, we are going to sell. So all these red zones that I mark here are sell positions times. So the red line is crossing the blue line here, and the RSI is above 70. So that's the time to sell your position. And you can see here that I marked this bot zone at 31,000. At that moment, RSI was around 55. And that moment we have our cross on the MACD, pointing that the bearish momentum was ending and we started a bull momentum according to this setting, right? So the blue line was crossing above the red line, and this indicates a moment to buy. Usually the best idea with this strategy is if you have the RSI below 30, that will be a very big confirmation, also with the cross of the MACD to buy a position. But in my strategy, I only use the MACD for the position, and I use the MACD and the RSI for sell the position. This works mostly in bull market situations like we have from already 1 year, because on a bull market situation, usually the RSI don't go too oversold. We usually don't see levels like 20 or less. The last time that we saw that, it was at $5,000. So this was 11 of March of 2020, 1 year ago. So this will be your best opportunity, of course. If you bought here, you will be selling at $58,000. But because we are in a bull market, I don't consider the lowest RSI before 30 to confirm a buy position. So if we are above 40, I already enter in a position. If we are below 60, I will say I will enter in a buy position. If we, of course, our RSI is below 70 and we have a MACD cross to buy, I will now enter in a bought position because the RSI is overbought. So usually that will mean that I need to sell. So you need to consider both indicators for your sell position and both indicators for your bought position. But you can avoid the lowest RSI for your bought position, but not for the sell position. You need to have the cross on the MACD and you need to be above 70 on the RSI to sell your position. And if you see in the chart, this has been working during the last year perfectly. So in this case, we have been bought here. It was February 3rd of this year when the MACD crosses and we have a 50 on the RSI. So below 60, it was okay. Or at 60 is also okay here. Actually, it was below 60. We have been bought at $32,000 and we will sell at $58,000 when the RSI it was above 70 and the MACD, the red line, was crossing the blue line. If we go to the previous trade, it was here. We have been having the cross here. You can see that the MACD, the average lines sometimes go near one another, but it doesn't cross. So you need to wait and see in the indicator the confirmation of the cross for the buy or for the sell signal anyways. And you can see here in the chart that in this situation also we have been bought at $18,000 and we have been sold at $40,000. Then we have been bought at $32,000 and bought at $58,000. And so you can check on your trading view also. This strategy has been working already from March of 2020, already 1 year. One thing to notice here is that we are using daily candles. This is the chart that I recommend you to use. It will not serve you to day trade. It will serve you only to swing trade. But in 1 year you had 1, 2, 3, 4, 5 already complete trades in 1 year that you could make absolutely amazing amount of money. So I hope you enjoy this strategy. I will show you some tips on the chart. The first tip that I want to show you is for the MACD. If you change the settings for 5, 13 and 1, you will see the MACD this way without the histogram and with another preference here. And here you will appreciate the MACD in a different form. When we cross from the bottom the line of 0, that will be our bias opportunity trade. And when we are above the trend, more above we are, it will be our sell opportunity. So you can match this also with the RSI, but it will help you also because on the other setting, usually you are not buying at the bottom of the moment that you have because the MACD is a lagging indicator. So sometimes you are passes a lot the moment of buy, but seeing it like this, even if the indication is to buy when we cross the line here at 0, if we already see that we are in this already parabolic bottom on the indicator, you may want to buy here, and in that moment you will buy and take a lot of more profits there. And then any time that you are above the line, you should probably be already on profits, but you need to wait to be in a very peak of this version of the MACD. But each time that we cross here from the bottom is the buy signal. Like we can see here, it coincides with the others. We have been here the cross from the line, and it was our bias opportunity, and the same here. And then we have our sell opportunity as far as we can go from the line. So this is one of the tips to use the MACD in a different way. Let me show you another. Another way to use the MACD is using the MACD bands, which is a different way of seeing the MACD directly in your chart. Sometimes this is more efficient for me, and sometimes I use it like this. It's more comfortable for me, see it in the price action. Basically, we have the momentum also like we had before. So when we change from green to red, it will be our sell position target, and we change from red to green, it will be our bias opportunity. And it coincides with all the other times that I show you in the different way with the MACD. So that's it for today. Give me your comments if this strategy worked for you, and if you have these tips for the MACD on your chart. Please, before we leave, subscribe to the channel, click the bell to get the notification, and like the video. And please leave me some comments and join me in Twitter at CryptoCState. Without anything else, see you in the next video.